Welcome back to Tech Signals. I'm Alex. Big headline today. SpaceX reportedly set an $800 billion valuation in an insider secondary and is preparing for a 2026 IPO. Short version, massive number, massive ambitions.
I'm Sam. Yep, Starship, lunar infrastructure, AI data centers, all capital-hungry projects. The insider sale implies an $800 billion price tag, and management is lining up a public listing next year.
Before we dive in, can you give us the practical read on what an insider secondary means and why this $800 billion figure matters?
Sure. An insider secondary is when existing shareholders sell shares to other private buyers, often employees, early investors, or new private buyers, without the company issuing new shares. It's a way to create liquidity and set a market reference price. That $800 billion number matters because it shapes investor expectations going into an IPO. It becomes the headline valuation that media, clients, and public investors will use to judge the offering.
There's been chatter about valuations north of $1 trillion in earlier reports. How worrying is this for public market investors if revenue is reportedly near $10 billion?
That's the tension. Valuation should ultimately link to fundamentals like cash flow, addressable market, and execution risk. If SpaceX is being priced near $800 billion on something like $10 billion in current revenue, that implies sky-high growth expectations. Think decades of dominance in launch, Starlink network expansion, AI compute revenue, and moon contracts, all priced in. The risk is a mismatch. Public markets can reprice the stock quickly if growth or technical milestones slip.
Musk's Mars plans are often part of the narrative. Does that help or hurt the IPO story?
Both. Mars is inspirational and helps build a brand that drives investor enthusiasm. It's the kind of mission-level storytelling that attracts retail and long-term believers. But it's also speculative and capital-intensive. Investors focused on near-term returns will see Mars ambitions as a long-term, uncertain expense rather than immediate upside.
So, humor me. Should investors be buying into the dream or the launch manifests?
Buy the launch manifests first. Check customer contracts, Starlink adoption curves, Starship flight test cadence, government and commercial launch pipeline, and the company's path to profitable AI data center revenue. The dream helps sentiment, but execution and transparent financials will determine sustainability in public markets.
Final quick take. If SpaceX pulls off a 2026 IPO at these figures, where does that sit historically?
It would be among the largest IPOs ever, on par with the biggest tech-era listings. It would also make SpaceX one of the most valuable publicly traded companies at listing, provided markets accept that valuation. But history warns us that lofty private valuations often compress once a stock is freely traded.
All right, that's a great roadmap. Let's shift gears. The preceding audio summary was created at JesterEngine.com, where you can find and verify the original sources.